Hello, wealth explorers. Have you ever wondered how the stock market functions? And how you can potentially grow your wealth through it? Today, we're diving deep into the fundamentals with a beginner's guide to understanding how the stock market works. Whether you're entirely new to investing or looking to refresh your knowledge, this video will demystify the complexities and provide you with a solid foundation for navigating the world of stocks. The stock market is a complex financial system, but its basics can be understood with a few key concepts. Here's an overview of how the stock market works. Stocks and shares. A stock represents ownership in a company. When you buy a stock, you become a shareholder, owning a portion of that company. Companies issue shares of stock to raise capital for various purposes, such as expansion or research. Stock exchanges. Stocks are bought and sold on stock exchanges, which are organized marketplaces. Major stock exchanges include the New York Stock Exchange, NYSE, and the Nasdaq. These exchanges facilitate the trading of stocks between buyers and sellers. Public and private companies. Public companies are those whose shares are traded on stock exchanges and can be bought by the general public. Private companies, on the other hand, do not trade publicly. Their shares are held by a select group of investors. Stock prices. Stock prices are determined by supply and demand. If more people want to buy a stock, demand, than sell it, supply, the price tends to rise. Conversely, if more people want to sell than buy, the price tends to fall. Market participants. Market participants include investors, traders, and institutions like mutual funds and pension funds. These participants buy and sell stocks based on their investment goals and strategies. Stockbrokers. Stockbrokers act as intermediaries between buyers and sellers. They execute buy and sell orders on behalf of clients and may provide investment advice. Stock indices. Stock indices, like the S&P 500 or Dow Jones Industrial Average, track the performance of a group of stocks and provide a benchmark for market performance. Trading hours. Stock exchanges have specific trading hours during which stocks can be bought and sold. They are usually open on business days and closed on weekends and holidays. Initial public offerings, IPOs. When a company goes public for the first time, it conducts an IPO. During an IPO, the company issues shares to the public, raising capital. These newly issued shares can be traded on stock exchanges. Stock market orders. Investors can place various types of orders, including market orders, buy or sell at the current market price, and limit orders, buy or sell at a specified price or better. Stock market indices. Stock market indices like the S&P 500 and the Dow Jones Industrial Average track the performance of a group of stocks. They are used as indicators of overall market health and can serve as benchmarks for investors. Dividends and capital gains. Investors can earn returns from stocks in two main ways: dividends and capital gains. Dividends are periodic payments made by some companies to shareholders. Capital gains occur when the value of a stock increases, allowing it to be sold for a profit. Volatility. The stock market can be volatile, meaning that stock prices can fluctuate significantly over short periods. Factors like economic data, company earnings reports, and geopolitical events can influence market volatility. Investment strategies. Investors use various strategies, such as value investing, growth investing, and technical analysis, to select stocks and manage their portfolios. Risks. Investing in the stock market carries risks, including the potential for loss of capital. Diversification, research, and a long-term perspective can help manage these risks. FAQs about stock market basics. How do stocks represent ownership in a company? Each share of stock represents a fractional ownership stake in the company. Shareholders have a claim on the company's assets and a right to a portion of its profits. What is the role of stock exchanges in the stock market? Stock exchanges, like the NYSE and Nasdaq, are organized marketplaces where stocks are bought and sold. They provide the infrastructure for trading and ensure transparency and fairness in transactions. How are stock prices determined? Stock prices are determined by the forces of supply and demand. If more people want to buy a stock than sell it, the price typically rises, and vice versa. What factors influence stock prices? Stock prices can be influenced by a wide range of factors, including company earnings, economic conditions, Geopolitical events, interest rates, and investor sentiment. Who are the major participants in the stock market? Major participants in the stock market include individual investors, institutional investors, such as mutual funds and pension funds, traders, and stockbrokers who facilitate transactions. What is the difference between public and private companies? Public companies have shares that are traded on stock exchanges and are available for purchase by the general public. Private companies do not trade publicly, and their shares are held by a select group of investors. What are market indices, and why are they important? Market indices, such as the S&P 500 and Dow Jones Industrial Average, track the performance of a group of stocks. They provide benchmarks for assessing the overall market's health and performance. How can I buy and sell stocks? Investors can buy and sell stocks through brokerage accounts. They can place various types of orders, such as market orders, buy or sell at the current market price, or limit orders, buy or sell at a specified price. What is the significance of dividends and capital gains in stock investing? Dividends are periodic payments made by some companies to shareholders. Capital gains occur when the value of a stock increases, allowing it to be sold for a profit. Both contribute to an investor's returns. Are there risks associated with investing in the stock market? Yes, investing in the stock market carries risks, including the potential for loss of capital. Market fluctuations, economic events, and company-specific factors can impact the value of stocks. How can I develop a stock investment strategy? Developing a stock investment strategy involves setting clear financial goals, assessing risk tolerance, conducting research, diversifying your portfolio, and considering a long-term perspective. It's important to note that the stock market is influenced by a wide range of factors, and investing in individual stocks involves risks. Many investors choose to diversify their portfolios by investing in a mix of stocks, bonds, and other assets to spread risk. Additionally, consulting with a financial advisor can provide personalized guidance and help tailor an investment strategy to your financial goals and risk tolerance. As we conclude our exploration of how the stock market works, remember that knowledge is the compass guiding your investment journey. If you found this video insightful, please consider sharing it to help others grasp the basics of the stock market. Keep learning, keep growing, and stay tuned for more financial wisdom from our wealthy community.